Good evening, everyone. I'm Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Davangare Sugar Company Limited. Today, we will provide a brief overview of the company and its innovative business model. Davangare Sugar Company Limited (DSCL) is a Karnataka-based leader in integrated sugar, ethanol, and renewable power. The company has diversified operations encompassing sugar manufacturing, ethanol production, and co-generation of power. It produces ethanol from both sugar and grain with a strong focus on innovation and sustainable growth. From management team, we have Mr. Ganesh Shamanur, Chairman and Managing Director, Mr. Abhijit Shamanur, Non-Executive and Non-Independent Director, Mr. Onkarappa, Chief Financial Officer. Good evening, everyone. Welcome to the live.
Is also here. Yeah. Mike, you come here. So put your chin there. You can start here.
Now I hand over to Abhijit sir to tell us the journey of the company. Over to you, sir.
So Davangare Sugar Company was started, it was actually incorporated in 1970. It was a joint sector company where financial institutions, farmers and banks all came together and Karnataka government bodies, industry bodies came together to form the company. 1974 was the first year of production. At that time it was 1,250 TCD. And in 1995 it was taken over, majority of the shares were bought over by our family members and the Shaman Group took over the company in 1995. So since 1995, 1996, we have been operating the company, and we now have a crushing capacity of 4,750 TCD. There's a co-generation power plant which was commissioned in 2004, which is a 24.5 megawatt. We set up a 65 KLPD distillery that was in 2023. It's been 2 years of operation. So we're a fully integrated sugar cogeneration and distillery green power, green fuel plant. So this has been, we almost have about 5 decades of experience within this industry. And the company has been running for the last 5 decades. And the promoters have been actively involved since Mr. Ganesh has been involved since 1995. I've been involved since 2012. So we've been actively involved in day-to-day affairs of the company.
Okay. Sir, can we start with the presentation?
Yeah, sure.
Abhishek sir, we can start.
You can go ahead. You want me to go through the presentation?
Yes, sir. In short, you can just walk us through the presentation.
Sure. I'm just opening up the presentation copy on my phone since it's easier to read.
Okay.
So, like I've told you, the installed capacities currently, and we have a cane cultivation belt of around 30,000 acres. Around 430, 433 employees are employed in our company. We have a farmer network of around 5,000 farmers. We are FSSAI certified 9,001 and 14,001. Our plant is situated where the company owns about 165 acres in Kukwada, Karnataka, which is Davangere district. So for future scope of expansion also, we have a huge land bank. And we have 6 warehouses and a total capacity of 6 lakh quintals. And in our financial year 2025, overall our revenues were around 214, so almost 215 crores. Our EBITDA was around 52.27 and our profit after tax was around 10.83. The vision in our company is leading in ethically produced sugar, renewable power, and ethanol, creating lasting value for farmers, shareholders, employees, and the planet. Our mission is innovating and reward shareholders, empower employees, and protect the environment. So I've already told you about the basic journey of our company, where recent update was we've installed a multi-feed distillery, and this year, well, that should be 2025, initiated expansion to ethanol capacity of 85 KLPD. So we believe that this is the right time to optimize our plant efficiency, reduce our costs, and add a CO2 recovery plant as well. So ideally, we want to expand by 20 KLPD this year, and in the next 1 or 2 years, we would like to further increase the capacity. That has not completely been decided to what quantum, but there is obviously scope for growth. Next. You can go to the next slide. Executive Independent Director, and Ms. Vinitha Modak, who's a non-executive independent director. So you're looking at the different sectors what we operate in. We operate in sugar, ethanol, and power. So I've already told you the capacities of the sugar and the power, the ethanol units, and power as well. So the good thing about the power cogeneration is that it's a captive consumption power plant. So majority of the power required during operations for sugar and ethanol and everything, most of the power is produced in-house, majority. And we in fact export excess power generated to the grid, which creates an additional revenue stream. And obviously this results in huge cost savings in power over the entire year. Our product portfolio, if you can see, we have sugar, we have electricity, we have several byproducts, which is press mud, which is organic fertilizer, which is byproduct in sugar production. CO2, we're in the process of setting it up. We have molasses, which is a byproduct of sugar production, which in turn is used as raw material for the ethanol plant. We have ethanol, which is the end product, which is supplied to oil marketing companies. This is IOCL, BPCL, HVCL. So at distillery capacity, we also have the capabilities to produce ENA to supply to the liquor companies, which we have done in the past, but currently it's more viable and feasible to produce ethanol. So we are doing that. And we also have potash, which is potassium-rich fertilizer as a byproduct, which is supplied to the farmers in neighboring villages. Last year, the crushing capacity, in the operational metrics, last year the crushing capacity, the crushing was just 1.82 lakhs. This was due drought in the previous year, which affected cane yield and recovery. This year, we're hoping for a much better estimate. And power generated was on 2.56 crore kilowatt. Our recovery was on the lower side due to shortage of rainfall in drought areas. And we have a current farmers network of 5,000 farmers, and we are only trying to increase that by further enhancing them and incentivizing them to plant sugarcane. So if you look at the manufacturing capacity, so you can see sugar, what we crushed, what and with cogeneration is a 24.5 megawatt, how much power was generated. And overall, so I don't know whether everybody is aware or not, sugar is a seasonal and cyclical industry. So we operate only from 5 to 6 months of the year. So we usually start our crushing operations in September and October, and we go up to February and March. And the plus point was setting up the distillery and setting up the ethanol plant is that we can run our ethanol plant around 300 to 330 days of the year. So this provides us additional revenue streams throughout the year, reduces the financial crunch, what we have, capital crunch, instead of just operating of 6 months and then not generating revenue or minimal revenue for the next few months. Now we have revenue streams for the entire year flowing in. So quick facts and figures, we're located in Karnataka. It's a leading sugar producing state after UP, Maharashtra. Our factory location is in Kukwara. We have 165 acres. We are surrounded by 30,000 acres of fully irrigated sugarcane fields. And we are obviously trying to increase that area now. And our sourcing radius is around from between 5 kilometers up to 100 kilometers, where most of the cane for our sugar factory comes. Now, if you go to segment-wise bifurcation, you can see the last year that out of the 260 crores of revenue, only 50 crores came from sugar, 50.86, and 150 crores came from ethanol. In the previous years, if you look at financial year 2023, where we uh, where we generated around 280 crores of revenue, you can see that sugar revenue was around 130 crores and 128, 124 crores was from ethanol, where 50% mix of sugar and 50% mix of ethanol was the scenario. Now, ethanol has significantly surpassed sugar, and that is obviously last year due to a huge shortage in sugarcane. But even then, in the upcoming years, I definitely see ethanol revenues surpassing sugar. Sugar revenues will still contribute to a good amount, maybe about 40% of the overall revenue. But ethanol has huge scope for expansion, and this is only further going to increase our revenues. Now, if you look at the sugar industry outlook, demand and supply, so there is sugar demand which remains high due to obvious daily household usage. Sugar is staple; it's a staple commodity, and it's used widely across food, beverage, and all other confectionery sections. So there is a growing preference for organic sugar due to natural processing, nutritional benefits, and demand from Ayurvedic and health conscious segments. The plus point is we have a refinery where we can produce non-sulfited, chemical-free sugar, and we already have that unit operational, and we've been running it for several years. So last year, India exported around 4.24 lakh tons of sugarcane until April. This year it was significantly less. From what I recall correctly, if my figures are correct, it was around 1 million metric tons. And India's sugar output is projected to rise to around 35 million this year. And there's a diversion of 40 lakh metric tons of sugar for ethanol production, which is allowed for 24-25, which was allowed last year. So the government is also definitely supporting the ethanol drive. They give us quotas. Our company puts in tenders. They have fixed buyback rates, and this has definitely been helping the industry overall and helping the company as well. You want to explain regarding the CSR, Uma? Or okay. Regarding the CSR, our CFO will just explain.
Our company also is discharging its liability towards corporate social responsibility, and also our company is running a trust providing education to the rural poor students, and for more than 30 years our company is running a school for rural poor students free of cost, and also it is encouraging the surrounding rural area development, green belt development, and growing of trees, greenery development. So last year we spent about nearly more than 44 crore rupees on developing green belt in the surrounding villages. So our company is stressed upon developing green belt and also providing education to the poor students, and discharging even before the CSR obligation came into existence. Our company is rendering services in the field of education, providing education to the poor students through the trust, which was opened about 30 years back. So company knows very well, shoulders responsibility of its commitment towards the social enrichment of the surrounding villages and surrounding poor students. Yes, next.
Next slide. Next slide.
Building.
The next slide. This slide.
Yeah. Now coming to this one, our company is setting up a CO2 plant with a 35 TPD capacity, which is going to minimize the emissions and also utilize the carbon emissions and convert the same into dry ice, food grade dry ice, which is supplied, and also the uh, industrial gas is also produced, which is supplied for industrial purpose. So, and also the bagasse we use the bagasse as a fuel for generation of electricity, which is also going to minimize the emissions. So, and also even our distillery plant is zero waste, adopted the zero waste technology, and also our power plant operates with biomass and bagasse, which is also with lower emissions. And company supports that E20 ethanol blending target, and we are going further the growing
I'll
market.
speak about road drivers. Yeah. Yeah, sorry. So going back to the market overview, trends and growth drivers. So the next slide, please. So there are obviously rising ethanol blend mandates. In February this year, we have already achieved the E20 blend what was targeted actually, and that was supposed to be met by 2030, but we have almost reached it 5 years early. So, which is a great thing, and the government is definitely supporting that through government incentives and all of this. And our overall ethanol production in the country last year, if the sources are correct, around 600 something crore liters, 670 crore liters were produced. And in this year, in June, we have already surpassed 660 crore liters. So, from estimates, it may go up to 850 to 900 crore liters, the overall ethanol produced within the country. So the blending targets and mandates are obviously going to increase, and there are significant investments in ethanol plants which are going on. There is rising automotive sector adoption. So cars are capable of handling this E20 fuel. There are no major issues. There are favorable policies. There are technological advancements. There are significant byproducts which we make as well. There's a demand for cleaner fuels. There's a significant savings in the forex and import bill of the country. So going next to the ethanol blending program. So based on the feedstock, the ethanol prices vary. So the recent price update was C heavy molasses. They had increased from 56 rupees to 57 rupees per liter, and for B heavy it is around 60 or 61 rupees. For syrup it's 65 rupees, and for damaged food grain is around 71.86. So based on the feedstock, the OMCs decide the buyback prices, and these are fixed buyback prices, which there is no great volatility, which is a good thing because there's stability for us producers. So there's obviously price stability, reduces crude import dependency, and aids in foreign exchange savings. Like I told you already, India has already achieved the 20% ethanol blending 5 years ahead. 1.96 lakh crore has been paid out to distilleries, fueling the growth of this domestic biofuel industry. And 1.36 lakh crores has been saved in forex. So overall, apart from the capacities which are increasing significantly, the flex fuel vehicles are compatible and they're able to take this fuel and have no issues with it. There are long-term offtake agreements which secures us producers, and this obviously produce rural employment and income as well. There's more income, there's more employment which is generated in and around all the plants which are being set up. Next, the quarterly financial performance. So if you look at this, you can see the financials which are obviously online as well. Quarter-wise, you can see the financial performance. And
during the financial year 2024-25, we had a total turnover of about 216 crores, and also the quarterly breakup of the revenue. First quarter it is 45.57 crores, second quarter 39.32 crores, and third quarter 73.17 crores covering the season. Next, fourth quarter is 56.90 crores. And also EBITDA, first quarter was 9.82 crores, second quarter 15.05 crores, and third quarter 18.62 crores, and fourth quarter 10.24 crores. Coming to PAT, first quarter during the financial year 24-25, the first quarter ending June, 94 lakhs, and for September quarter, it is 128 lakhs, and for third quarter, covering up to December quarter, 6.76 crores, and fourth quarter, 1.94 crores. So during 24-25, totally our company earned a PAT of 10 crores 83 lakhs.
And if you go to the next page, you can see the profit and loss statement as well for the corresponding last 3 years. There is a slight dip in the profitability in comparison to the previous years. Obviously, that's due to high interest costs and, of course, lower sugarcane crushing and lower revenues. And the balance sheet as well is there for your viewing and study. CFO, do you want to comment anything on the balance sheet? Okay. So the objects of the issue we can go to now.
So, the main objects of our rights issue, the present rights issue, where we are proposing to raise around 149.21 crores, say about only 150 crore rupees. The majority of the amount we receive from the rights issue is going to be used for repayment of the existing loans. Out of the 150 crore rupees, 50 crore rupees of the rights issue portion is going to be subscribed by the managing director of our company in the form of adjustment of unsecured loan against equity, rights issue equity. And another 100 crore rupees is going to be received from the public. And this 100 crore rupees is going to be used to the extent of 67.5 crores is the repayment of existing term loans, and 32 crores is going to be used for general corporate purpose, and some portion of the amount is to meet the rights issue expenses. And out of the general corporate purpose, we are using some portion of the money for working capital needs of the company. So this is the main object of the issue. Main object of the issue is to clear the existing loans and to improve the profitability of the company. That is the main object of the issue.
That's it. So you can see the stock data as well, and Mr. Omkarappa forgot to mention the issue price, which is at 3.05, and you can see the stock data as well. Now, going to the SWOT analysis. So we have fully integrated sugar, ethanol, and cogeneration manufacturing facility. So we're completely integrated where raw material, the initial raw material sugarcane, and the byproducts, the end products and byproducts which are produced during the sugar manufacturing process are used as raw materials for our other complementary industries. So we're fully integrated plant. There's abundant availability of sugarcane grains around the area for our distillery, such as maize and broken rice. We're in one of the largest maize growing regions in Karnataka, which is again another major advantage for us. Water, labor, and power. We have a large land bank of 165 acres, which is currently valued at 450 crore. We have a robust process in place to produce high quality ethanol. Our cogeneration of power ensures captive usage and export of surplus power, which saves us considerable amount of money in the long run. Promotes sustainable economy by generating local employment. Our weaknesses, we are highly dependent on sugarcane supply. As you saw last year, how it's affected our financials. And we are vulnerable to climatic fluctuations affecting the raw material availability and production. The counter argument for this highly dependent on sugarcane is the fact that we have already set up a distillery. We've been running it for 2 years, and we are able to run the distillery even without any sugarcane end products such as molasses or sugarcane juice. As long as we have sufficient grain, and we are able to operate throughout the year. This will reduce our dependency on sugarcane, which is a major advantage for us, having a multi-feed distillery. The opportunities, if you look at the significant demand supply gap, which was just met this year, I think we're just waiting for the government to increase this blending target from 20% to whatever they plan to increase in the next coming years. There's opportunity to scale using efficient and modern technology. We are always looking to improve our plant efficiency and reduce our costs and operate in the most efficient manner possible. We have proven track record of operational success for all these years. The ability to ensure better utilization of our fixed assets and growing relevance of sustainable and green solutions. We are a zero waste, zero discharge company where everything which comes out, even from the sugar section or the distillery section, whether it's water or any byproducts, are recycled. Other products are sold. There is nothing left out. There is no damaging the local ecosystem within the vicinity. The threats are obviously rising competition from regional sugar mills and neighboring sugar mills, and the exposure to change the government policy. We are obviously highly dependent on government policies, and the policies are definitely favorable, and we don't foresee any sudden changes in policies, but this threat is always going to be there. So this again is somewhat similar to the SWOT analysis and the CSR what we spoke about. So we have sustainable community development, which our CFO has already spoken about. We have co-generation of power in order to reduce our energy costs, improve operational efficiency. We have stringent process specifications, what we have to meet to supply to these oil marketing companies, and we have been successfully meeting this for all these years. We're a fully integrated manufacturing plant, which I already mentioned, where raw material and end products which are produced in one unit is used as raw material for the other units. We have location-wise, we are in a good geographical location where we have abundant sugarcane, grain, water, labor, power, and we have huge land bank which is unutilized right now, where we can obviously do future expansion. So, if you're looking at the next slide, the strategic initiatives and growth strategy. To again reiterate that this 149 CR, almost 150 CR is going to be raised to the rights issue. This utilization majority will be utilized towards repayment of existing loans. Slight, the balance amount maybe to a quantum of 30, around 32 crores that will be utilized for working capital and small expansion requirements for the distillery unit. We plan to increase the sugarcane cultivation area by another 15,000 acres. So we are reducing our footprint of bringing sugarcane from further distance and try and keep it within the vicinity as close as we can to the factory. We want to, we're also in the process of setting up a CO2 plant where we generate additional revenue. And our growth strategy obviously is this year is we want to increase the capacity to 85 KLPD and expand our sugarcane cultivation and obviously maximize ethanol output in the off season of crushing seasons. The investment rationale. So most of this has already been said. I'm just going to reiterate, we're in a strategic location, we have scalable infrastructure and huge land bank. Energy-wise, we are self-sufficient. We have a power surplus, which will support us for future expansion as well. We have zero waste approach with effluent treatment, byproduct recovery, and green energy supporting ESG compliance. The plan is to raise 149.22 CR through a rights issue, through repayment of loan, which is expected to definitely enhance our profitability and reduce our existing capital burden, interest burden. We're an integrated and diversified business model. We are not dependent only on one sector such as sugar. We have sugar, power, and ethanol and ENA capabilities where we can decide the right product mix based on the government policies and the current market prices. So you're aware of the ethanol E20 blend, which I already spoke about. We have multiple revenue streams, like I just told you. And we have long-standing relationships with the farmers dating back 50 years, and we do CSR programs, we provide education at a free manner. So this is all community development and providing employment within the vicinity. So overall, we have always been supportive of the farmers and farmer-centric growth. We are in turn buying their products, buying their sugarcane, giving them buyback rates, supporting them throughout the entire growth process, and providing them employment as well. So in turn, really empowering the farmer community. That's all. Thank you very much. Our MD, Mr. Ganesh Shamur, would like to add anything if we missed out.
Nothing what my subordinates have explained is more than enough. Thank you for the interaction.
Thank you very much. Thank you.
Thank you.
Thank you. Thank you.
Thank you. Question.
I request the participants to post their questions in the comment box.
Okay.
First question is from Arav Banerjee. How has DSCL's 5 decade legacy shaped its culture and business model today?
How has DSCL's 5 decade legacy shaped its culture and business model today? So, the fact that we have a 5 decade legacy is very good. Our family, my father took over the company in 1995. He's been involved for the last 30 years. I've been involved for the last 12 to 13 years. Overall, I would say having business experience and expanding our capacity when the time was right, maximizing maximizing the value which was supported by a geographic location. So that means increasing cane area. Okay, setting up a power plant in 2004 where there was huge power which was exported over the years at considerably higher prices. Power prices have actually come down now. So that was entering into a new vertical, power after sugar. Apart from expanding the sugar to 4,750 TCD and setting up the distillery, which I also spearheaded from the last 2 years. So we have de-risked ourselves. We are constantly adapting ourselves to the changing government policies. And my father comes from about 35, 40 years of business experience, and I come from around 13 years of business experience. So I think keeping all these factors in mind, it has helped us take the right decisions at the right times in order to continue our company's growth.
Okay, next question. Deepak Kulkarni. Ethanol production capacity utilization is nearly 100%. What operational efficiencies enable this performance?
So the operational efficiencies which enable this performance, one is we are running our plant almost throughout the year. We do stop for maintenance, planned maintenance. So almost for 330 days of the year, our plant did run last year. And
Ample raw materials.
we have sufficient raw material as well. So our feedstock raw material is not an issue, which was not the case for our sugar unit, for example.
During the season molasses and off-season.
Next question.
Okay, next question. Deepak Kulkarni. How do you manage seasonality in sugarcane crushing while ensuring round the year ethanol operations?
I think I already answered this in my presentation. So we
See-
operate sugar for 6 months. Sugarcane takes almost 1 year to grow, and most of the harvesting is done between September up to March. Okay, and the rest of the year, including during sugar season, our ethanol plant is running.
No, the sugar industry,
Okay.
as rightly pointed, is a seasonal in nature. Okay, seasonal in nature. And our season
Next
starts
question.
September and ends by February. During this part of the period, we use molasses as the raw material for the ethanol unit. And once
Yeah, you can answer this. Yeah.
Bimal Gandhi, can you elaborate on the role of byproducts like molasses, press mud, potash, and CO2 in your revenue mix?
8% revenue contribution. See, molasses is one of the byproduct in the process of manufacturing sugar, and this molasses is used as a feedstock for ethanol production. So the molasses will be consumed in production of ethanol. Uh, and this fresh mud is only around 1% of our sugarcane crushing will be the yield, it will be the wastage. Fresh mud is the waste. Like potash also is the byproduct of our distillery and is also about 1 to 1.5%. And CO2 also it is around 2% of our distillery. Uh,
So overall, I think it would be around 5%, which would contribute to the revenue mix. But the fact that even these products, which other factories may not sell or dump or whatever it is, or even sometimes give it for free, we are able to generate revenue from this, which is a plus point. Next question, please.
Okay. Next question. Bhavinder, India achieved its 20% ethanol blending target 5 years ahead of schedule. How does this shape demand visibility of DSCL's ethanol output?
I don't think this we have already achieved our target, but this will not affect our demand because we have continued tenders up until October. So we have a 10-year offtake agreement from the oil marketing companies, and if anything, from what I know, the government will increase the ethanol blend. E20 was the visionary target which was supposed to be achieved by 2030. So the good thing is we have achieved it 5 years earlier. So if anything, they're going to increase this blend.
And also the stability of our ethanol supply is from a long-term agreement, 10 years agreement we have entered into with OMCs. And the OMCs give preference for dedicated ethanol production plants. Ours is a dedicated ethanol power plant, which has entered into 10 years agreement. For 10 years, they give preference for dedicated ethanol plants. And whenever we apply for the tenders quantity, whatever we applied, they're going to allot for the dedicated ethanol plants. That is the advantage what we are having with the OMCs. So there will be no any scarcity of the demand.
Next question, please.
Kirti Yadav, please can you elaborate on the diversification benefits from aviation segment's revenue?
How much revenue does it contribute? And yeah,
See, uh, this aviation division is not the major division of the company, and we are having one helicopter uh, which is used for the business purpose of our company, and in the spare time it is chartered out for the public or other purposes. So around 2.5 to 3 crores is the revenue which is generated from this helicopter chartering. So 3 crores means around it is 2%, around 1.5 to 2% of our total revenue is only from this aviation division. This is not a significant income. Uh, that we
and
want.
the costs of operating that are obviously offset by chartering the helicopter.
Okay. Next. Prathamesh Gandhi, what are the biggest risks you foresee over next 3 to 5 years and how are you preparing for them?
Okay. So the biggest risks which we have faced in the past and which I still foresee us facing in the future is weather, rainfall, which is definitely affecting our sugarcane yield and sugarcane availability, and mills in and around our area which are competing with us for sugarcane. So how are we mitigating that? Is my focus is going to be more towards ethanol. My focus is more going to be more towards ethanol because there is sufficient raw material availability here. It is a continuous revenue driver for our company, and we will still obviously continue sugar in a big way, but our focus will be towards expanding the ethanol unit. And the good thing is, with these risk factors, if we can decide on which, based on current market prices and government policies, if say price of sugar is not good today, I'm able to divert more production towards ethanol. I don't have to produce sugar. I will send the sugarcane, instead of making sugar, I will send sugarcane juice towards ethanol unit, which is allowed, which the government also pays us for. So this is how we're planning for this. And of course, at the same time, we're trying to increase our cane cultivation area, strengthen our relationships with farmers even more, and increase our overall cane plantation area.
Okay. Next question. Payal Mure. What role will technology and process automation play in your growth journey?
Technology and process automation is already playing a significant role in our current production journey and our current company's journey. Our plant is completely automated, where most of our operators sit in our distillery plant, for example. Most of the operators sit in the operating room and they operate the entire plant. Of course, there are helpers and other employees which are in the plant vicinity, but you can virtually operate the entire plant just from sitting in one room. And this role of technology is going to increase even further, and it's going to strengthen our ability where we can achieve better process efficiency and reduce our costs even further.
Next question. Amardeep Dosanjh. With rising
With rising
competition from
competition from regional mills, how does the company plan to maintain its differentiation? So the way we plan to maintain our differentiation is we provide subsidies and loans up to almost 30,000 rupees per acre, which is provided to farmers, which assists them in plantation for seed, fertilizer, and cash component of the sugarcane crop. This next year we're going to see, based on the financial strength, we may increase our amount slightly, but overall is to convince farmers within this vicinity to plant more sugarcane and overall provide them a complete assistance from plantation up to harvesting, which we are already doing, but with a more involved level.
okay. Next question.
And establishment relationship over 5 decades is helping our company to have an edge over the competitors.
Yes, we do. Yes, we do. I have answered this question earlier.
Next question, please. Nikunj Patil, how are you aligning with India's push for cleaner fuels and sustainable energy goals?
Uh, like you've already seen our production capacities, how much ethanol we've produced, and we all ethanol producing units supplying to the oil marketing companies are contributing towards the cleaner fuel and sustainable energy goals of the country. And this is going to result in huge forex savings, which is already happening, and this is only going to increase further.
Okay. Next question. What is company's long-term vision beyond financial year in terms of revenue mix and market positioning?
So we see a significant expansion in the ethanol sector in the next 5 years. With sugar, we want to achieve maximum capacity utilization. We want to mitigate our risks from competition. We want to ensure steady sugarcane available and ensure steady grain and other feedstocks are available for our ethanol plant as well. So ethanol will definitely be surpassing the sugar revenues down the line, and there will be a significant increase in our capacity by financial year 30.
Next question, please. Prathamesh Gandhi, how does company's zero waste and circular economy approach translate into long-term competitiveness?
I think the whole goal towards companies nowadays is to be sustainable, long-term sustainability, to go completely green, to have zero waste, zero discharge, which a lot of MNC companies are already following. A lot of Indian companies are not necessarily following this. In terms of long-term competitiveness, it is good for the economy, it is good for the company, it's good for the neighboring villages. So overall it's a goal which we are going to try and keep emphasizing. A lot of companies are not doing it because they may not see value in it, but I definitely see this as long-term value added for the company.
Okay. Next question. Vedant Shetty, what message would you like to give to retail investors considering participating in rights issue?
So the message I'd like to give is, you've seen the company history, you've seen the company financials, you've understood our company goals. So there is definite scope for growth and value addition for investors. There is definitely going to be value addition in terms of overall how we operate our financials and value to the shareholder. So this you'll definitely see in the upcoming years. So there is significant value in investing and being a shareholder with Davangare Sugar Company.
Okay. Next question. Sugarcane supply remains a key vulnerability. How do you mitigate climatic and monsoon related risks?
We have tried drip irrigation in the past, which has been has been adopted, but not to the extent we would have liked. We are in fact in a highly irrigated area, so there is competition from other crops which are more remunerative. So the whole goal is to provide better incentive to farmers. And I mean, they say sugarcane's a lazy man's crop. You plant it and like you have to wait for a year. You get good returns, but you don't have to do much. It's not like other crops where you have to be continuously involved in the process. So the whole goal is we cannot avoid the climatic and monsoon related risks, but we want to avoid our dependence only on one crop. That is why we have sugarcane, ethanol, where sugarcane is one raw material, grain is another raw material. So this is how we are mitigating our risks.
Okay. Next question. Shankar Verma, what impact do government ethanol pricing and blending mandates have on your long-term revenue predictability?
So the government ethanol pricing and blending mandates have a positive impact on our revenue predictability because we know how much ethanol we need to produce, we know what the margins are, we know our offtake agreements, there is no volatility in pricing. I'm just going to give you an example where uh, one, the government provides subsidies also for ethanol plants. So our cost of borrowing was done at a lower rate, and we have to supply about 70% of our production, 70%, right, CFO, to the oil marketing companies. So for the first year of operation about 2 years ago, I was producing majority of my produce was ethanol, but I was producing ENA as well. And the difference I noticed was with when I was producing ENA, I was continuously negotiating with the ENA buyers, the liquor manufacturers, for higher prices and all of this. And what I noticed over time was the ethanol prices were significantly higher. There was there was no negotiation. There was complete offtake. Whereas with other products, with ENA, for example, they would tell me, okay, load on this date, load on that date. Here, we are continuously loading our ethanol tankers every day to different IOCL, to different oil marketing depots. So these are all things, and I believe, considering the amount of investment which has gone in the country, and how quickly this whole ethanol blending offtake uh, has come to light, the government is also aware that many industrialists, many business people have put in huge amount of capital within these plans. So these policies are going to stay put at least for the next 5 to 7 years. We definitely see favorable policies. Beyond that, it's hard to say.
Okay. Next question. Vedant Shetty, how do you balance the volatility of sugar prices with the more stable ethanol revenue stream?
Is controlled by government.
No doubt, the sugar price, no doubt, sugar price is uh, not controlled by the government, but it is market driven. But the central government is going to fix the statutory minimum price. The present statutory minimum price is 31 rupees. And we are also selling sugar at 38 rupees, 37 rupees, 36 rupees, During season time, due to more supply of the sugar to the market, the prices may vary from 33 rupees to 35 rupees. And during off season, the price will go up to 40 rupees. So like that, the volatility in the sugar price is there. So that volatility is going to be it is depending upon the availability of the sugar in the market. In the years where the sugar is produced in a huge quantity, naturally the sugar price came down. There is balanced by the profitability of the ethanol unit.
I'll just add to this. So what our CFO was saying was, look, the government increases the FRP of sugarcane every year. Okay, that we have no control over, and this is the price which is the fair and remunerative price, which is mandated by us to pay to the farmers, and the MSP is the minimum support price, which is 3100, which is our selling price, which we are not allowed to sell sugar below that. We definitely don't want to sell sugar below that. Current market prices are around 39 rupees ex factory. But what I'm trying to point out to you is that when we are in a scenario where we feel sugar prices are low, we can divert more production towards ethanol. Like I told you, we can during season we can send sugarcane juice directly. So at 4,750 ton crushing capacity, for example, up to 3,500 to 3,700 tons of sugarcane can be sent only for sugar production. Balance 1,000 tons can be sent directly to the distillery by making sugarcane juice, and that is utilized for ethanol production, where we feel if sugar prices are low. And then we have B heavy and C heavy molasses, which we have different offtake prices for. The percentage recovery of B heavy yield and C heavy yield also varies. So these are all factors which we take into consideration before deciding our product mix, and this keeps changing every 2 months based on current market prices. We decide ideally what we should make more of. Should we make more sugar? Should we make more ethanol? And that's how we are able to de-risk ourselves. It's an advantage.
Okay. Next question. Beyond debt reduction, what strategic flexibility will this capital infusion provide?
Yeah, question. What is the question?
Beyond debt reduction, what strategic flexibility will this capital infusion provide?
What strategic flexibility?
So overall,
See, one of the main objects of rights issue is debt reduction, and this debt reduction definitely it is going to bring flexibility and liquidity, more liquidity in the hands of the company. So with the more liquidity, the company can have more advantages in the material purchases, raw material purchases, where we can negotiate with the suppliers at bargain. We can bargain and at reduced prices, we can purchase the raw materials. So like that, this debt reduction on one way, it is going to reduce the interest cost, and other way, it adds to the liquidity and flexibility of our working capital requirements, and have a positive impact on the company.
Next
a
question.
simple thing I'd like to add with this question is, for example, this will increase our flexibility, provide us more working capital and ability to, for example, we procure a lot of grain, whether it's maize or broken rice during the harvesting season at low prices, and after the season obviously prices go up. So this capital flexibility will ensure that we're able to procure this grain at the lowest price possible in the maximum quantity. So that will ensure that supply throughout the year, raw material availability for our ethanol plant throughout the year. Next question, please.
Sudhir Mahajan, what is the revenue expected from CO2 plant?
CO2 plant, it's very minimal. It's 3 to 4 crores. Around 3 to 4 crores annum.
Okay.
But
Next question.
instead of just allowing the CO2 gas to be let out in the atmosphere, we are capturing this and monetizing it. So that is a plus point.
It's additional bonus income for the.
Yeah.
Okay. Next question. Arav Banerjee, thank you for the great prompt answers. The future
Thank
of the
you.
company.
Thank you, Arun.
Thank you.
The future of the company is very bright.
Good luck with your rights issue.
Thank you. Thank you, Aditi.
I think we have covered majority of the questions. Thank you, Abhijit sir. Thank you, Ganesh sir, and thank you, Onkar sir.
Thank you.
All the
Thank you
best
for
for the
everyone. And thank you for all the participants. Thank you.